welcome back, YouTube. So let's talk about today the loading of the 0.22 range and what this red means overall. So really quickly at the beginning of the video, I want to address this because I know I'm seeing some of the comments on X at least, and they're saying, hey, does this drawdown or does the red invalidate the run or the sell-off? And the answer is no, not yet. This typically happens. I can show you really quickly before I even get into the video. Even here on this golden cross here at the same indicator, the 14 of the 72, we had 3 sell-off days here, and it used the 21-day average as support. And it happens a lot. Sometimes Bitcoin does this a lot as well. It rises the 21-day average, and then so you'll have like this it's still technically averaging up, but it'll quickly come down, ride that 21, ride the 14-day average, and then use that support and then bounce back up. So it doesn't invalidate the trend because coming down to the 14-day, 3 days and using it as support, or 4 days using it as support, and going back to like a higher average is not going to invalidate a 14-day trend. The biggest thing you want to make sure you keep note of is that the average that we're using here, this yellow line, is a 14-day average. So a lot of times people want to use 24, 48 hours to invalidate the last 2 or 3 weeks. And you have to have aggressive movements to do something like that. Or if you're day trading or something, then yeah, you can panic because you may not get a turnaround in a quick enough time. But if you're long term, there's no need to panic over those types of indicators. Now, an invalidation would be breaking below the 21-day average and curving it down or something like that. That would certainly invalidate it. But what I'm seeing here is nothing that hasn't happened even before we had our initial big run up, because we're at the 72, similar to what we're doing right now. This is why I use this as a catalyst. If you look down here on the left, between the 17th and the 19th of February, we pretty much were doing the same thing we're doing right now. We were on the 14-day, which is what we were doing between the 14th of May here, rallied up to the 72, which is what we did here, had 3-4 days of minimal price movement, had the overlapping, got the cross, because again, 3-4 days is not going to invalidate 2 weeks, and then we had the ascension here. So overall, if we get some type of reversal, obviously I'll let you guys know, but that's not what the charts are saying right now. You can't, if you're talking about trends here, whether or not something is an upward trend and you're long-term in an asset, 24, 48 hours doesn't invalidate 2-3 weeks, a month. That's not a strong indicator here. That's more so like leading with emotions. And you'll see even here, if we zoom in, on yesterday's price action, we did exactly that. We came down to around 15,103, but we closed at 15.7, and we pretty much came down and used the 14-day as support and rallied off of that. So what's important here now is that over the next 2 weeks that we continue to close this gap between the 14 and the 72, right? In order to do that within the next week, we'll need to maintain roughly around an average around 16.3, which is why I put that on the thumbnail. But even if we don't, that just means that we'll kind of come into like this parallel. And so that just means that we may cross in 2 weeks time or 3 weeks time, but it's not an invalidation of the trend. And to talk about the parallel, this is what I mean right here. So we pretty much had the flattening of this orange line back in January. This is 72, the orange line here. And the 14 kind of ran parallel to it, right? It was, the price action was trending along with the 14-day, but it was using it as support, trending along with it. It was staying within averages of itself. And then we got that momentum here to close that gap and got the rally up. So what we're looking at here is more so getting getting the time frame for the 14 across the 72, because if you're looking at the opposite of this trend here, which is the 72 crossing the 14 and causing a death cross, then that's something that's going to take months, right? To kind of curve that down here, if we talk about the 14-day average, because then it'll be chasing it for a while. So we are in great shape. This isn't, and a lot of this was due to, like, I know some panic today was about whether or not the Ethereum ETF would get approved and kind of what things will be said, but it did get approved. So that's certainly a great number here. But really what we're looking for is the timing, right? Right now, if we maintain an average around 16.3, then we're looking at this cross sometime within the next week. If we don't, then and we get some parallel price action, then that just simply means that we are may take an additional week or so to get that cross. Again, the biggest thing before I move on to the next point is if we break or start holding below the 14-day, which means we start to kind of cause to have a divergence from this current trend that we're on right now. But right now, this is still an uptrend. This is not a threatening a reversal here. So I know sometimes if you look at smaller time frames, then you can get like those panics on there. But we typically, at least I don't typically look at those time frames because I'm not day trading. So what do I care about a 5-minute or the 1-minute charts and stuff like that? So we typically look at the longer ones here, and you can look at and compare this overall for Bitcoin. You'll see Bitcoin got this here is a golden cross here for Bitcoin, right? It happened today on a red day. Why? Because it's still averaging higher than the 72. So I imagine sometime within the next 48 hours or so, we should see some upward movement or at least some sideways movement from Bitcoin. So the 14 and 72 have not been invalidated. I don't think either this bull run or the last one. So this is normally really, really a strong indicator. So we should get some balancing here within the next day or so in Bitcoin price action because the golden cross is confirmed in Bitcoin. And typically that means that a rush of capital is coming into the market. We can take a look at total market cap and see how that's closed up over the last day, how that's weighing in. We have another day. It's really close. The total market cap is really close to getting that golden cross. Obviously, this is made up mostly of Bitcoin, but it does have the weight of all the other coins in there to give you an idea. And if this is your first video, remember, last time we got this cross, we went from 1.567 trillion to almost 3 trillion, right? We went to 2.7 roughly at its peak. And a repeat of this is going to put the entire market, as far as for total cap, at an all-time high. So this is a really big signal for crypto here. And again, even coming off of red days, because we're higher than the average, the gap is still closing. This is why I said for Doge. Sorry, I'm jumping around, but I want to make a point here because I know people are a little confused. So this is why I mean, even for Doge, even as long as we are above the 14-day, and it's still going to rise. But if we want that cross here, we're going to have to, at least the average is going to need to be somewhere around 16.3, 16.30 here. But as long as we're above this, every day we close above this, the current 14-day, we're going to get a rise here, and that gap between the 14 and the 72 is going to narrow. And as long as that's capital flowing into the market, and the trend is saying that, then we're going to be okay. So this is something we're going to have to look at over the next few days here, because this here is like the total market cap and like Bitcoin. This is a major signal for Bitcoin because for Doge, when we had this cross here, because we were around 8.5 when we were getting that signal of the cross here, and obviously at its peak we ran to around 22 cent, right? Grab some liquidity. And matter of fact, what is this? This is the chart I want. It's the Binance. There we go. Sorry, this is the chart I want. So yeah, so we had this cross here around the 8.5 mark, and we ran to this peak at around the 23 cent mark, and we're using the 14-day here as the support. But ultimately, what we're looking for is something similar here, right? Using the 14 days, similar to what we did here, and then getting that cross maybe somewhere between 16 and 17 cent. And if we're projecting a similar return, that puts the conclusion of this leg somewhere between 39 and 45 cent, right? So that's where those numbers are coming from, in case you guys were wondering. So again, it's not necessarily a completely smooth process. We did have some red days here, and we had 3 red days and 3 days of sideways movement while we were getting the golden cross, right? So we literally had around 6 days of not much going on before we got that big boom. So Worst case scenario, this can be, if we get this parallel price action, this can be extended for like another week or so, but it doesn't invalidate anything. The next big run up from here would be the case for 18 and 22 cent obviously was where our final rejection was, and then we start opening up some of those higher terms. The target obviously will be for 45 cents, but the case I made in the last video was we were on the cusp of the golden cross that we got back here in February. We went through a couple of the so-called rejection points that we should have had. The first one was 10 cent. Historically, we're not even talking about this run, but the previous run, we're talking about 2020, 2021. Historically, 10 and 12 cent was supposed to give us some trouble, right? Those two, 10 cents, 12 cents, they were supposed to give us some trouble. We were supposed to have some back and forth, and we just absolutely shredded those numbers and went to a high of around 20 cent at the end of that run here before starting to get pushed down. So the question is, are we going to have a repeat here? Are we going to run through 18 cent, 22 cent, and get the run gets exhausted somewhere around maybe 25 cent? Are we going to see a repeat of that? That's TBD at the moment, but you can make a case for that since we're pretty much charting a very similar pattern. Everything that happened prior to this golden cross here is happening right now. So we'll see if we get a red day today and then a very low volume green day tomorrow. If that happens, then we are 100% repeating the previous trend that we got from with this big run here. But I will say that whether or not we run through 18 and 22 cent, that is unlikely to have this many green days. This was a historic event. I couldn't believe it when I was charting it. I was looking for another time frame. Even the 2021 peak bull run session, was there any time frame where we had, I believe, like 9 consecutive green days of closing higher? I could not find one. So that was certainly a historic event. Unlikely we'll see something like that again, but hey, I would love to be wrong. So this is something we're just going to have to kind of monitor going forward here. But ultimately, we are doing good. We may even, because right now this candle is still open, right? We're at 15.9 now. So it'll be really a shocker here if we end up closing green, right? That even if it's very nominal, that'll certainly be very interesting here if we get a green candle here. And that'll certainly be great for pushing this 14-day and closing this gap overall. So let's take a look here to see the tone of the market here. See if someone's trying to make some wagers. No, this is a big thing here. Shorts are at 0%. No increase day over day. And again, this is another signal that I like to use because sometimes retail panics and says the coin is going down, but the people that make money off the coin going down don't see an opportunity to make money. So that's normally something I like to check to see what the tone of the market is. But again, we are certainly in a downtrend on shorts, and right now they're trending sideways, no increase, right? So that means that they are not optimistic, but they are hovering and hanging on to the 200-day moving average. That's this red line coming across here. They're holding on to the 200-day moving average and not wanting to go below that, but no confidence in Dogecoin shorts that the price action is going to go lower. So we haven't seen an increase there. So let's take a look here at Bitcoin, because sometimes you'll see similar price action, but normally Bitcoin shorts are a little bit smarter than Doge shorts. So we'll see. Bitcoin shorts coming in, trying to get some momentum here, coming back up to like the 14, still on a downward trend. No aggressive movement, still less than, pretty much on par with what they were 48 hours ago. And this has been going on for about a week now, where they take these positions and they come out of them, but nothing aggressive here. What is this? 0.26% on the day. So no aggressive movements on either one of them. I know I'm zoomed in here, but they're certainly below the 200-day, 72. They're below all the indicators that we use. Right now, they're still beneath even the 14-day. So we're certainly on a downward trend here, but we'll certainly see this going forward to see if they're going to try and pile in a little later, but no aggressive movements. The last aggressive movement we had was actually on May 1st. Most of the aggressive movements and the larger candles we've seen for Bitcoin shorts here are red shorts. I mean, are red candles, which means they're coming out of position. So they've been more quick to come out of a position than come into a one. So we're getting some of the same readings here across the market, that there isn't much faith that these coins are going to go down here, close lower. So right now we're battling for around that 16 cent to see where Dogecoin closes. But right now we are still projecting everything is going good. Just want to provide this update, and we will certainly chart this as we go forward. It looks like we may have a really good chance. I wish I could stay on here a little longer just to see where this candle is going to close at, but it looks like we have a shot at closing green today, which will be very, very interesting. Even if we close at 16 cents, that's really good. So obviously on the next video, this candle will have closed. Maybe I'll do another one a little later tonight and see where we close at. Maybe just a quick one, but it looks like we have a real shot at closing green today. So that's very exciting. So that being said, I hope you found value in this video. If you did, please consider subscribing to the channel so we can get to 100,000 subscribers before Bitcoin gets to $100,000. Leave me a comment in the comment section, and I'll see you guys in the next video.